Welcome back to Alpha Recap, your quick take on the market day. We're looking back at what happened after the close, and as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from the session. A classic risk-off day, but with some interesting leadership dynamics underneath.
All right, let's start with the big picture. The S&P 500 finished the day down about 0.7%. The Nasdaq 100 slipped about 0.4%, and the Russell 2000, our small cap benchmark, fell about 1%.
Yeah, and that little spread tells the story. Mega cap tech showed relative resilience, while smaller and cyclical names bore the brunt of the selling. So what really stands out here is the two-track market feeling. Breadth was negative across the board, but it wasn't a panic. Volume actually thinned into the close, which suggested more profit-taking and caution than a full-blown rush for the exits.
Right, and the tape was driven by mixed earnings and a couple of policy headlines, like renewed scrutiny in the cannabis space and tariff refunds for retailers. That combination felt especially tough on small caps.
Exactly. I mean, when you step back and look at this, several companies beat on revenue or earnings per share, but then gave softer guidance. That beat and guide down pattern tends to trigger selling. Investors like the numbers, but they hate uncertainty on the outlook.
Quick reaction. Honestly, I was a bit surprised by the cannabis move. It was a clear loser today.
Yeah, that group got hit hard. Policy headlines can squeeze a whole subsector, even if earnings aren't the issue. Regulatory risk is really idiosyncratic. It wipes out nuance and creates broad outflows.
Let's break down sectors. Utilities and some healthcare pockets outperformed, while energy and materials were mixed, and retail and small cap cyclicals lagged. Can you walk us through why utilities did relatively well?
Sure. Utilities are classic safe havens in a risk-off moment. Predictable cash flows, income orientation, and in this case, renewables and storage names had longer-term policy tailwinds. So investors shifted toward stability as guidance uncertainty mounted elsewhere.
And healthcare was a mixed bag, right? United Health reported a strong first quarter and helped parts of the sector. But other names were up and down.
Right. United Health's results reinforced the defensive appeal of large insurers. Better than expected metrics gave people a comfort trade. But research updates and uneven earnings elsewhere kept volatility in healthcare elevated.
Short reaction.
Communications and media were choppy thanks to ongoing M&A chatter and questions about content monetization. Industrials and materials had pockets of strength from earnings beats, but weaker guidance weighed on many names.
Hold on, say that again. The retail story had both good and cautious elements because of tariff refunds starting Monday?
Yes, tariff refunds were a constructive headline for retailers that had been paying those charges. The immediate effect is a near-term boost to margins, but analysts and traders were debating whether this is a one-time windfall or a persistent benefit that flows through to earnings. So the reaction was mixed. Some retailers did well, but small cap retail chains underperformed.
Short reaction? Right.
Energy showed a split too. Upstream producers versus midstream and storage plays. No single catalyst moved the whole sector, so it ended mixed.
Let's get into the earnings headlines that really shaped the day.
3M reported an earnings beat that gave guidance below street expectations. That pattern, good print, conservative outlook, sparked profit-taking in industrials and materials-linked names. Meanwhile, United Health had a strong first quarter and lifted sentiment in parts of healthcare.
Intel also got some attention today, right?
Yes. Intel jumped after an upgrade from an analyst at BNP Paribas who cited improving execution and product cadence. It's a reminder that single analyst moves can have outsized effects, especially in a thinner tape.
And there were a bunch of 8K filings that bumped some individual names, but didn't change the market's direction overall.
Correct. Company-specific filings, Vicor, Genuine Parts, Commerce Bank shares, and others, produced name-specific trading, but they were noise relative to the broader risk-off tone.
Quick reaction? Yeah, that tracks.
One other point on the corporate side. When several companies beat and then guided cautiously, it feeds the narrative that growth momentum might be softening. Analysts note that persistent softness among small caps could increase scrutiny on lagging pockets of the economy.
Let's pivot to the Fed and macro. There were no surprise policy moves, But how did the session interact with the Fed story?
The big takeaway was that today didn't force a change in expectations for the Federal Reserve, but it kept the door open. The Fed has been data dependent, and mixed corporate guidance makes participants watchful. Tariff refunds could modestly ease goods inflation where they apply, but overall CPI is still driven by services and labor. So the big inflation picture didn't materially change today.
So markets closed up or down relative to the Fed story?
Markets closed down, but the declines were concentrated. Big cap tech held up better, while small caps and cyclical names were more vulnerable. It's that two-track dynamic again. Mega cap growth seen as resilient in a steady rate world, smaller cyclicals sensitive to slowing growth.
Let's call out a few individual movers for listeners keeping watch lists.
United Health stood out with a strong quarter. 3M exemplified the beat and guide down reaction. Intel moved on the upgrade. Cannabis names broadly declined on regulatory headlines, and retailers had a mixed reaction to the tariff refund story. Constructive, but the market is parsing sustainability.
Short reaction?
From a technical and historical standpoint, this pattern, narrow leadership in large caps with compressed breadth, has shown up in prior risk-off periods, like parts of 2022 and late 2023. Indices can stay near highs even as fewer names prop them up. That's why breadth and sector rotation matter right now.
The note in the piece about the Russell 2000 underperforming by roughly 0.4 of a percentage point versus the S&P. That felt important.
Yes, that relative underperformance is meaningful because it implies a narrowing of where risk is being taken. If breadth deteriorates further, you could see a deeper repricing of cyclicals and small cap exposures.
Quick reaction. Interesting.
Looking ahead to the next session, traders told me they're watching the next round of earnings and the tone of management guidance. Any follow-up on cannabis policy, retailer commentary on tariff refund mechanics, and incoming economic prints, especially employment and inflation data. Those could shift the narrative quickly.
And volatility was elevated at the single name level, even if the index VIX wasn't spiking, right?
Correct. Implied volatility for many individual stocks remained elevated, which points to idiosyncratic risk. Earnings and policy headlines driving outsized moves in specific names.
Okay, let's wrap with clear takeaways.
First, the S&P 500 closed down about 0.7%. The Nasdaq 100 slipped about 0.4%, and the Russell 2000 fell about 1%. A day of broad weakness with meaningful small cap underperformance. Second, mixed earnings. Beats followed by cautious guidance, combined with sector policy headlines like those around cannabis and tariff refunds, drove the tape. Third, utilities and select healthcare names outperformed. Cannabis and many small cap cyclicals lagged. And finally, watch next session's earnings guidance, how tariff refunds are detailed by retailers, any further cannabis policy developments, and fresh macro prints that could force the Fed narrative to be reassessed.
Quick reaction. Got it.
One housekeeping note. This discussion is informational only. It's not personalized investment advice, and we aren't recommending buying or selling any securities. Analysts note market dynamics to help listeners understand the landscape.
Perfect. That's a wrap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. See you next session.